I ran that program in Laos, in the jungle on the Ho Chi Minh Trail. We spent $80 million clearing unexploded Vietnam War era bombs.
So this is like landmines and stuff like that.
I mean, it was one of the most heavily bombed places on Earth. It's a very slow, tedious process because there's so much fragmentation from large bombs that have exploded. When I first went to Laos, they said, find 2 million ounces of gold. Then they said, find 5. And then they said, no, you need to make it 10. And then ultimately they said, okay, it's not going to be big enough for Rio Tinto. We're going to sell it. So I subsequently ran the process to sell it. The gold price was $250 and the copper price was 63 cents. The very bottom of probably one of the worst down markets you could ever imagine. Nobody was interested in this project, irrespective of how good it was. We had 2 groups who expressed an interest, one of which was Oxiana Limited. Oxiana was run by Owen Hegarty. He had this junior company. It had a market cap of, I don't know, $3 million or something. Owen came in and was really the only person that put a bid on the table. We divested the asset to him. Owen said, well, why don't you join us here? So I took a punt. I joined Oxiana. I worked for 3 years for absolutely just enough to eat, and the rest was in equity. We built the company to a $6.5 billion market cap over 8 years.
All right, ladies and gentlemen, welcome to another episode of the Resource Insider podcast. I am here with Tony Manini. Tony has a lot of titles, which we're going to get into today. I think we'll largely be talking to him today about his role as chairman at Andina Copper, a company I am gratefully a shareholder of, a small one, and also his role as one of the founders and a senior executive at EMR Capital, where he has been for many years. Tony, thank you for taking some time today.
Great to be here, Jamie. Be good to catch up and good to have a chat.
Well, Tony, I'm excited to have you on here today because I do find there tend to be Australian mining media and podcasts and YouTube videos and Canadian sort of North American ones, and there's not always a lot of overlap. I find a lot of people in Canada are not as familiar with a lot of the companies and company builders in Australia, and perhaps vice versa. You find the same in Australia, and you've been one of the few people who I have met who seems to have successfully and perhaps proactively put a foot in both of those worlds. And so I'm excited for the work you're doing on Canadian exchanges and with Canadian businesses, and to start having these conversations in front of more North American audiences.
Yeah, no, it's good. It's good to. I think you're right, Jamie. Historically, that has been the case. I guess we're seeing, more of the Aussie entrepreneurs, the younger generation. No surprise, the likes of Craig Parry and Charles Funk, good friends of mine, and both who came through our stable of companies over the years and have, moved over to Canada to build their entrepreneurial businesses over there. So, I've got a long affection for the Canadian capital markets, and I've dabbled in it as a private PA investor for some time, but really only in the last few years I've got serious about. It's really off the back of jurisdictions that we've been working in South America, where the TSX has traditionally been the supporter of those jurisdictions, exploration in South America. So, that's some of the key drivers, really.
I was going to ask you, why are you a glutton for punishment? Because the Australian companies and Australian exchanges have outcompeted the Canadian exchanges so, I think, profoundly over the last several years. Now, we're starting to make up the gap a little bit in Toronto this year, But why is it that you would come here? Is it specifically for access to capital, more comfortable in those jurisdictions which you're now exploring?
Yeah, no, really good question, Jamie. So, look, there's a couple of things in amongst all that. So, the companies that I'm involved with, and Andina Copper and C3 Metals, both explorers in South America. So, traditionally, the South American explorers have been supported out of the North American markets, and very much less so here in Australia. Now, what is the reasons for that? You've sort of got to dig a little into the reasons for that. So here in Australia, the culture is really a mine building culture. So junior companies want to find a project, they want to take it right through to the development phase. They want to become a producer and they want to build off that. That's where the big fortunes have been made here in Australia. If you look through the who's who of mining fortunes, they're all entrepreneurs who've basically taken junior companies, turn them into producers and turn them into multi-asset producers.
Yeah.
So that's really the culture here. So if you sort of look across Australia, the way I always portray it to people, how many undeveloped 1 million ounce gold deposits are there in Australia? There's probably about, I can't even think of 5, right? So that's because they all get put into production. If you go over to North America, there's probably 200-300 which are undeveloped, right? So going back to the original question, so the Aussie market is about sort of get a project which a small company is can actually fund and build. If you go to South America, it's 70% of the world's copper production from the Andia Copper Belt. So, like, where do you go for copper? That's where you go. But what has traditionally been the role of the junior explorer down there is to explore, find something of substance, de-risk it, and sell it to a larger company. So the culture on the TSX has really been about supporting juniors to find big things to sell to big majors, whereas in Australia it's okay. That's too high risk. It's too high cost. Junior companies shouldn't be drilling deep holes looking for porphyries. So there's a cultural difference between the two markets in the way people approach it. So
is that a nature? Is that a reflection, do you think, of just frankly the type of deposits that those explorers have had access to in their geographical region, and the investor sentiment is I guess a reflection of success on the specific types of projects that they've seen from the explorers or the developers?
Yeah.
Or do you think that Australians go after one type of deposits and Canadians go after another type of deposits because of the appetite of investors? We're kind of getting into a chicken and egg conversation here, but I'm curious your thoughts.
There's an important piece to this is the Australians have traditionally been big explorers in West Africa, for example, and in other parts of Africa. So you say, why are they comfortable going to Africa and not to South America? And it is deposit type. Okay, so why have they gone to West Africa? Because it's Archean or low gold systems, which are very similar to what we have here in Western Australia, which most of the junior companies are built on. They tend to be relatively shallow. They tend to be, the access tends to be easy. They tend to be lower cost. They tend to be able to, because it's gold, you can get it into production quicker, which is what the focus of the companies are, to get into production. So it's sort of driven by that smaller, higher grade gold deposit exploration approach, and then there's the smaller, high grade base metals things as well. So again, it's that sort of culture of mine building. It's like, okay, what is, where can we, how can we, with the minimal amount of capital we've got as a junior company, get into production? So they've not, they've gone to taken on West African risk because it fits that profile. You go down to South America, these are big deposits, multi-billion tons. They tend to be, in locations of where there's higher altitude. You've got to bring water a long way to get to build the mine. So the capex is much, much larger. So you've got bigger capital in terms of the exploration phase, and you've got bigger capital in terms of the mine building phase. So again, it's that sort of cultural thing with the different markets of where people are just driven by, okay, focus is to get to production as quickly and cheaply as possible versus I want to find something really big that actually is going to be of interest to a mid-tier or major.
And now you're a geologist by training. Did you start your career at one of the major mining companies or with a smaller explorer?
No, so I started, just a little bit of intricacy, but I started with one of the major companies, but immediately prior to one of the major companies, my very first job was I finished uni and I immediately went to Kalgoorlie in Western Australia, which may be familiar to some people here. It's like one of the traditional gold mining centres of Australia. So I went to Kalgoorlie and I worked in an underground mine, which was run by a very famous entrepreneur by the name of Alan Bond, and who famously took the America's Cup off the Americans, if you remember. And I think they called it a national holiday in Australia when that actually happened. So the Prime Minister called a national holiday. This is a country that has a holiday for a horse race. So I worked there at the underground in the Croesus. It was a very old historical mine, terrible condition. But there was a very interesting thing was happening at that time. They were transitioning from, Alan Bond had this big idea to turn all these small underground operations into one large single open pit mine, which if you go to Kalgoorlie now, it's right on the edge of town and it's called the Super Pit and it goes for kilometres and kilometres.
So he consolidated that Super Pit,
the
initial version of that?
Correct. He consolidated it all and he conceived the Super Pit and started building it. One of the really intriguing things about that is, I'll tell you a couple of little things. So I was there for only a short period of time before I started with Rio Tinto, or CRA as it was at the time. But two interesting stories. Number one is we had all these old underground mine workings, one of which the shaft of the mine came up into the Boulder Block pub, into the hotel. So you came up the mine shaft actually into the pub. So the workers would come from underground up, arrive into the pub and just go into the pub. So it was historically had been there. The pub had been there since the 1800s and had never changed. They started building the Super Pit. The owner of the pub said, well, I'm not going to sell to the mine. He held out. So the pit was built around the pub, sitting on an island. And the pub was still sitting on an island with the pit sort of shape going around the pub. Eventually, I think the old post office, he held out as well. The postmaster held out, and they eventually got bought. But we had these islands projecting out in the open pit with a pub and a post office on them. It was pretty intriguing. And the other story is that I even remember the guy's name, Jimmy Plekas. He was an underground miner and working in the underground workings, and the open pit had got down to, I don't know, maybe 100 meters down already. Anyway, Jimmy Plekas was found one morning. He broke through to the surface and was walking around in the bottom of the open pit, the underground miner, with all these big trucks sort of running around the open pit around. I mean, you can just imagine these days from a safety perspective, it'd just a nightmare. But anyway, that's what happened. So the Croesus mine was still working as an old underground mine under the, the open pit. And the miner had actually he'd got through to the surface of the pit. So a couple of interesting stories there. So going back, so that was my first job, interesting, sort of best part of a year. Then I went to CRA, and CRA was the precursor, merged with RTZ to become Rio Tinto. And I was there for 15 years, Jamie, within CRA Rio Tinto. So, which, CRA was quite a small, I shouldn't say small, it was a big company, but it still had a very strong entrepreneurial, exploration-focused culture, and a great place to work and learn and work with, some extraordinarily good geologists. And then ultimately it merged with RTZ in, I think it was about 98, and became Rio Tinto. So, and I was there for another short period of time after that, and then ultimately left. Yep.
And so if I recall correctly, you left for Oxiana after selling them a deposit from Rio. Do I have that right in my notes? Yeah.
You have that right. You have that right. So, okay. So the history is I went to Laos. So as I said, working for CRA Rio Tinto. I started in diamond exploration in the Kimberleys in Western Australia. I worked in diamond exploration, then base metals and gold in the West Australian goldfields, again for CRA. Then I worked on a uranium discovery, big uranium discovery in Australia, which was a very good experience too, drilling out a deposit and all the things that it takes to take an exploration discovery through to a mine. I got that exposure very early. I went to Laos. Then after that, I was working in the gold fields, and my boss sort of said, Tony, we think you'd be well suited to go to this new frontier and open up an office and start the exploration up there. So I went to Laos 98, 89. And then I had 2 years in Thailand. I had 8 years in Laos. I had quite a bit of time in Indonesia. We made a really good discovery in Laos. So I led the team that made the discovery, over 5 million ounces of gold, and what subsequently turned out to be about over 100 million tonnes of 2% copper, all open pittable. So the mine, so in 98, when that, so I led that discovery and I ran that program in Laos, in the jungle on the Ho Chi Minh Trail, unexploded ordnance. We had metal detectors sort of guiding us around, and we spent $80 million clearing unexploded Vietnam War era bombs. And
so this is like landmines and stuff like that primarily.
It was an incredible experience and project. And then we subsequently, when that merger took place, that I mentioned before, CRA RTZ, the company then said, when I first went to Laos, they said find 2 million ounces of gold. Then they said find 5. So we found 2, then we found 5. And then they said, no, you need to make it 10. So at that point in time, it's like, we're never going to find 10, but they gave us a bit of time to do that. I think it was the next couple of years. And then ultimately they said, okay, it's not going to be big enough for Rio Tinto. We're going to sell it. So I'd been there for the best part of, 8 years, 10 years. And then I was given the role. By that stage, I'd moved into a commercial role within Rio Tinto back in Australia. So I'd only been back a short period of time. And they said, Tony, you know this project really well. We want you to run a process to sell it. So I subsequently ran the process to sell it. And I often remind people the gold price was $250 and the copper price was 63 cents. And it was in the very bottom of probably one of the worst down markets you could ever imagine. It was the Ho Chi Minh Trail in Laos, one of the most heavily bombed places on earth. There was still an insurgency running in the northern part of the country, and nobody was interested in this project, irrespective of how good it was. So we ran a process, and one of the participants in the process, there was really only two groups who we had about 7 groups who'd expressed interest. You know, you get some crazy entrepreneurs who'll always have a go at something. We had 2 groups who expressed an interest, one of which was Oxiana Limited, and Oxiana was run by, was really 3 people at the time. There was a secretary, a CFO, and Owen Hegarty, who is still my business partner today. And so Owen was ex-CRA, 25 years, Rio Tinto, copper, gold, Asia. So he had this junior company, which was effectively had some projects in Cyprus, Philippines, but was looking for a company maker asset. It had a market cap of, I don't know, $3 million or something.
Yeah.
So anyway, Owen came in and, you know, was really the only person that put a bid on the table. And subsequently, we divested of the asset to him. Rio Tinto kept 20%. We sold 80%. We sold 80% for, I think it was $1 million down, work program with a $20 million payment at the completion of the feasibility study, or might have been on first production. And then Rio kept 20. And that was very important, Rio keeping 20, because it gave investors confidence that the project still had legs.
Mm-hmm.
So subsequent to that,
did Owen want that? He wanted to have that endorsement from Rio?
Well, it was sort of very deliberate. And I was sort of involved in negotiating that from the Rio Tinto side with Owen on the other side. So we're on the opposite side of the tables at this stage.
Yeah.
So then when the asset transacted and Oxiana had it, then Owen was looking for, you know, part of the deal was that I would go and help Owen transition the asset across to Oxiana, because I knew Laos, I knew everybody involved, and we transitioned it across. So I did that, and then subsequently Owen said, well, why don't you come and join us here? You know, we're going to build a business off the back of this, and you know it better than anybody else, so on and so forth. So I always had this desire to be involved in the junior end of the business. Yeah. In fact, going back to the original questions, my dream job, Jamie, was to be the commercial manager or the business development manager for Rio Tinto, based in Vancouver, working with all the juniors in Vancouver. So, okay, you know, like, that was my dream job. And interestingly enough, Rio Tinto offered me that job at the same time as Alan offered me to go to Oxiana. So I was sort of torn, very torn, because that was the job I always wanted in Vancouver. Anyway, I ultimately had that sort of entrepreneurial bent. I could get into a junior who had a good project that I knew was a real substance, and we could build off the back of that. So I took a punt. I joined Oxiana, and effectively I worked for 3 years for absolutely just enough to eat, and the rest was in equity. So I got paid in equity and very minimal salary. Joined Owen at Oxiana. I think I was number 4 employee. And then we built Oxiana from that point onwards.
And how old were you at this stage? What place?
So I was, what would I have been? It's a good question. I would have been, so I joined Oxiana, let's call it 98. So I'm 31.
31. So you're in your early 30s. You've had a good career at Rio. Things are going well. And you've spent about 8 years in that part of the world already. And then now you're doing kind of that classic entrepreneurial mining strategy, which is buying projects, accumulating them, putting them into production, right? Is that the goal? And so that's it. I want to talk about Oxiana, but first I want to ask you, you know, how does one go about clearing ordnance and landmines in the middle of the jungle in Laos or Vietnam in the late 80s and early 90s?
Yeah, so, well, you know, it was one of those things. It's not it's not a skill or experience that you typically get in a mining company. So,
No.
so it was a little bit of it was a little bit of learning on the job. So,
I will
in
tell
Laos,
you as a segue, one of my first girlfriends when I was in university, when I told her I was becoming a mining engineer, she asked me if I was building landmines for that. So,
yeah, don't worry, you get that question. We got that question quite a bit, and it was a subject of quite a lot of jokes. It wasn't funny, but it was subject to quite a lot of jokes. So, no, look, what happened was that Laos was, I mentioned earlier. I mean, it was one of the most heavily bombed places on earth. When I first went there, it's extremely poor country, and it did have quite a few what they called UXO, unexploded ordnance, aid programs. So it had aid programs running where donor countries were funding, mine and bomb clearance programs for out in the rural areas where people were getting maimed, injured, and killed from these mines. So there was sort of like, okay, there was a traditional method for doing it. We subsequently then sought out a commercial contractor who did the same type of work, and they're all ex-military people. There's commercial enterprises who do clearance work, and we went to those groups and subsequently contracted them. Initially a small team, and then it grew into multiple large teams. You clear the vegetation first, whether it's a trail, whether it's an area, the vegetation gets cleared. It's a very slow, tedious process because there's so much fragmentation from large bombs that have exploded. So it's just very tedious and slow. But anyway, we did it. We built a mine on that site, and it was a massive achievement.
wow. Yeah, not many people can say that. That must have cost hundreds of millions of dollars to.
Yeah, I think we spent between 80, let's call it 92 and 2002, 10 years, we spent about, close. We would have spent $8 to $10 million a year on clearance, US at that time, which is a lot of money back then.
Yeah. And now how big did Oxiana get over its tenure?
Yeah, so Oxiana between 98, so essentially that was really the start of Oxiana. Oxiana had some projects, legacy projects in Cyprus and the Philippines, as I said. This was company maker asset. From 98, call it 2000, 98 onwards to 2008, so it's an 8.5 year period. We built the company to a 6.5 billion market cap over 8 years. So
what was it when you joined? Was it in that $3 or $4 million range still when you joined?
Correct. Yeah.
Wow. Yeah. That's incredible. So this must have been largely acquisition focused, I would
say. So we acquired the Sepon assets from Rio Tinto. We built the first gold mine. Believe it or not, I described the situation in Laos at that time, bottom of the market, absolutely. There was not a single debt funder that was ever going to give you any money to build a mine. So it was all equity from high net worth individuals. So we built the first mine for, I think it was $49 million. Small gold plant. We got up and running, started production, started cash flow, and then expanded the gold mine, grew the gold mine to about 150,000 ounces a year of production, and then off the cash flow from that, we then built the copper mine on the same site next door. That was a big investment. That was ultimately ended up being about $400 million and then $600 million to build the copper plant, which was big, large producer. And then we acquired a project. So off the back of that, we then made an acquisition from Newmont, which was in Western Australia, a mine called Golden Grove, where it was a non-core asset for Newmont. We approached Pierre Lassonde, who was the CEO at the time, and it was agreed that they would sell it. This non-core was a base metals asset, and Newmont was a gold company, right? Actually, gold. It was producing some gold, but it was a base metals mine. So we acquired that. We redeveloped that. Then we subsequently made an acquisition of an early stage discovery in South Australia called Prominent Hill. It had a few holes into it. A junior company had discovered it, Minotaur Resources, and they were looking for a partner. Most people, everybody, I shouldn't say everybody, but a lot of people looked at it, and most people thought it was about 35 to 50 million tonnes. I had a look at it, and I had a different view, and I said to Owen, we're going to go over here and we're going to drill some holes over here. If these holes come off, this is like multiple 100 million tonnes deposit, not tens of million tonnes deposit. And then we should be ready to go and take this junior company out immediately if these holes come in. So we JV'd with them. We went and drilled the holes. The holes were just world-class intersections, a long way away from where they'd been drilling before. And we immediately bought out that company. We subsequently took that through production. It was like a world record from discovery to 100,000 tonnes a year copper producing mine in 7 years, I think it was, and $1 billion spent. So
wow,
we did that. So we had the 3 mines then, and then we had then we made an acquisition of another, again, very similar thing. A mine that had been discovered in Indonesia called Matabi. And we were sort of on our way to putting out of production. Subsequently, in 2008, we merged. Oxiana was merged with Zinifex, which was another mid-tier producer, base metals producer. The GFC hit. The assets ultimately got split up into 2 companies. Some of them went to Chinese producer MMG, and some of the assets went into Oz Minerals. So they founded Oz Minerals. And then Oz Minerals subsequently, off the back of those assets and then some additional things that were added to it, Oz Minerals grew from there to a 10 billion takeover by BHP. So you've sort of had, I talked about the original 6.5 billion, but then that also seeded the Oz Minerals piece, which was created another 10 billion of value over and above that, plus whatever went to MMG. So it was a big value creation exercise.
How the asset that you went from discovery to production in 7 years, do you think there's any copper project anywhere in the world you could do that on today?
No.
Yeah.
Yeah. No. So look, there was the South Australian government. It was one of those circumstances where you had a new government who was very incentivized to get regional development. They couldn't do enough to actually support you to get this mine built. Everybody played their role, and the overlay of permitting was nowhere near as heavy as it is today in terms of timelines. So you certainly couldn't build a mine of that scale anywhere in that time frame. I think, Jamie, the average today for a new greenfields copper development is 14 years.
So twice as long, basically.
Twice as long. Now, if you were in an area where, there was an existing mining lease and it was permitted and it was a smaller mine, then you can probably still do a small gold mine in 7 years now, but not a large base metals mine. No chance.
Yeah. Well, so you kind of had this tremendous run, right? From, $3 or $4 million company to a $6 billion company. And then you had, you were making enough money to get by and barely eat, but you were clearly accumulating equity, which I assume ended up being very lucrative over that time period. But what happened in 2008? How did things change? Because you kind of caught one of the, true great runs in
Yeah.
history. What happened for Oxiana after that? And then how did it bounce back in, 2010, 2011, where things started to come back after that?
Yeah. So look, Oxiana was in the middle of multiple mine builds, expansions, and
Hmm.
part of the reason for the merger with Zinifex had made $1 billion the year before, right? So the logic behind the merger was you had a strong cash flow generating mature company with little
Hmm.
growth, and you had a growth company. So logically putting those together. But then the GFC hit, and everyone knows what happened in the GFC. And we needed to roll over a lot of debt at that time. And basically all banks, because of what happened in the banking system, there was just, you could not roll over anything. So there was a lot of stress, and ultimately that's why there was asset sales, and half the assets went to MMG and half went to into the Oz Minerals vehicle. So and just in terms of the share price, so Oxiana was, as you say, it was, the market cap had been building. I don't know what the market cap dropped to, but I can tell you what the share price dropped to, because here's me, I was holding all those shares, and so were a lot of the other guys who built the company. We were around $5 a share at the time, and during the worst, I think it went down to 50 cents.
Okay.
So, and then it subsequently was consolidated later on. So call it $5. And then it went back to around $20 a share over time. So it effectively, it went from 5 to 50 cents, and then it went from 50 cents back to what's that? What did I say? $17, $18, I think the BHP takeout was at. So, it was a roller coaster, and I
Yeah.
think, Rick Rule, I heard Rick Rule say the other day, you shouldn't be in this business if you're not prepared for up to a 50% drawdown at any given time, right? Um,
Yeah.
well, that was a lot more than the 50% drawdown, but
Yeah.
but if you and I know many of the original investors who hung on and sold to BHP at $18. I mean,
Yeah.
they made a fortune. Yeah.
How did you manage that, right? Those ups and downs kind of emotionally at that time? Because I assume you probably had a tremendous amount of your net worth tied up in that company at
Yeah.
that time, and you go up and you go down, and how did you kind of get through that? Did you just put your head down and sort of focus on the work and try not to think about the share price, or
Yeah.
what?
So I think two or three key points. So number one is high conviction, right?
Yeah.
The assets hadn't changed. Okay. The assets had not changed. So, this is a theme you'll see through my sort of the way I think about things, and things that I do today. I'm always looking for fundamental asset quality, and when you have fundamental asset quality, you have high conviction in the asset, and you then need to have the emotional wherewithal to be able to ride out the ups and downs.
Yeah.
So that's important. So, I do have but it's both an innate and also a thing which comes through a lot of experience, that, you need to be calm when there's a storm. And if you have high conviction in your assets, you just put your head down, you get around your team, you keep everybody motivated, and you have a plan which gets you through those difficult points to come out the other side. Because ultimately, if the asset hasn't changed and you'll be able to build a lot of value off the back of that asset when you come through. In fact, I go the opposite way. You know, when people are running for the hills, I'm generally investing money, right? So, yep.
Well, after this, you guys went on to found, I think, what has to be the best named mining company in history, Tiger's Realm. Uh, and
Yep.
as so this is of your companies and what you've done, this is the part I understand the least. So was
Okay.
Tiger's Realm a development company? Was it an investment company? How did
Yeah.
that work? And then let's talk about how it kind of emerged from there into, I think what happened is it emerged from Tiger's Realm into EMR Capital, the private equity fund you're a partner in now, or maybe I've got that totally wrong. So
Yeah.
this is the part of the conversation I've been keen to get into because I don't understand it very well.
Yeah. Okay. There's a few interesting things here. So, the so as I said, the assets were broken up in Oxiana, Oz Minerals. I was in Oz Minerals for a little while. I was the head of exploration and business development for Oz. I was there for a short period of time, less than 1 year. And then ultimately, I sort of could see that it was not for me. It was becoming sort of much more process driven and bureaucratic, which just wasn't a good fit with my sort of personality. So I then started this group called the Tigers Realm Group, and a lot of the original investors in Tigers Realm were high net worths who'd made some serious money out of Oxiana. So they're like, okay, what's the next thing we're going to do here? So this was set up, Jamie, as an incubator company. So the intention was to use private capital, go and find good quality assets, which were where you already had, and this is sort of a bit of a thematic that I sort of work to, where you had walk up drill targets, scale, walk up drill targets, scale. The opportunity had been overlooked or underexplored for whatever reason. And then there was a line of sight to, okay, you could see your way through it to a resource, which once you get to a resource clearly has a value metric attached to it.
Mm-hmm.
So we then,
And
then
do all this privately, right? That was the
and do
plan
the
at this point. Yeah.
correct
Okay.
privately. So then we would go and we did, and we went and we incubated a couple of junior companies, we acquired things, and it was a mix of things. And then what we would do was use private capital to get it to the point where we had a good value marker in terms of uplift. And then we needed larger tranches of capital to take it from there, de-risk it into a mineable proposition. We would then go to the public markets and list those companies. So that was the business model. And I built a small team there within Tiger's Realm to sort of execute that plan. So Owen was the chairman. I was the CEO and the founder. I got Craig Parry out of Rio Tinto. I coaxed Craig to come out of Rio Tinto to work there. Actually, Craig was already in Oxiana. He came into Oxiana in the latter stages of Oxiana and then came across to Tiger's Realm. And then Chris McFadden, who's the chairman of NextGen Energy, because that was where we incubated NextGen Energy. Chris is still there today. And then a small number of other people. So yeah, it was an incubator company. We incubated four companies out of that. And they were Tiger's Realm Coal, which was listed on the ASX, made a great discovery in Far Eastern Russia, met coal in Chukotka. It was a great success story in terms of we got on the ground in Russia. We had a great partner, Leonard Skopchov. We did the exploration work. We did all the mine planning, development. Ultimately, it got into production in Far Eastern Russia. Was scaling up to 1.5 million tons of met coal a year, and then everything fell apart with Russia, and we effectively got sanctioned out of the project. So that was a very painful thing when you'd put a lot of time and effort and built a big, very, built it was a lot hard grind, but we'd built a very good mine there over time. And then the second company was Next Gen Energy, and I think plenty of people here will be familiar with Next Gen.
Yeah.
So we seed funded Next Gen. We acquired a project up there in the Athabasca, seeded Lee Career and Andy Brown to acquire this project called Radio. It was immediately next door to Rough Rider. We then subsequently Lee and Chris, and who was our was the chairman, identified this opportunity down in the southern Athabasca, southwestern Athabasca, which was the Arrow project, and the rest is sort of history. So we sort of backed them into that. We got that was flown, and I think it was the second drill hole discovered a world-class deposit. So it doesn't happen like
$7 billion today, and probably the best uranium deposit in the world.
Yep. Yeah. So that was a huge success. We put the first $5 million in at 5 cents. What's the stock today, Jamie?
$11.61 as of today. Not bad.
Yeah. So so that was Next Gen Energy. Then we incubated Asia Met Resources, which is in Indonesia, copper gold. I've just sold sold one of those assets to a Chinese company for around $200 million out of that business, and I've still got one asset which still another good copper gold asset in that company, which I've got a lot of interest in as well. So ultimately we will have created some very significant value out of that. And then the other one is C3 Metals, which is renamed. It was originally called Karube off the back of copper gold in Jamaica. And that was very much an opportunistic thing. We picked up this project in Jamaica, which is ultimately now sits inside C3 Metals. C3 Metals, about 100 million market cap company, junior explorer, listed on the TSX. So they're the 4 companies incubated out of the Tigers Realm Group.
Okay, and then how did that end up? How did you end up at EMR Capital with Owen again? So for people that don't know, EMR is one of the largest mining private equity funds in the world. You've got billions under management. As I understand, you don't take stakes in other people's projects, right? You own 100% of the assets and manage and operate them yourselves. Do I have that right?
Yeah. So EMR, around 12 years ago, we were off the back of the success of the Tigers Realm Group. We then conceptualized of putting together a resources investment fund, and then we looked at the various models, and then ultimately we went with this private equity model. Originally it was $100 million, which then ultimately grew over time to, we manage about $3 billion, and our business model there is really operational turnaround. So it's a buyout strategy. So buy non-core assets. If you think about the history that I've just been talking through today, it's really about buying non-core assets out of mid-tiers or majors, or struggling juniors who can't make the transition to a producer, putting our sort of strong operational development, operational team into those assets, putting capital into them, turning them around. A lot of exploration as well, Jamie, a lot of drilling in the brownfields environment to expand the resource reserve base, fully optimize the mine, do an expansion or prepare for an expansion, and then ultimately on-sell the assets once they've been turned around, expanded, optimized and expanded. So that's sort of the private equity strategy. We've been doing that for around 10 years. We own and operate a number of mines, mostly in Australia these days, but we've got some development projects in other jurisdictions. We've had a very successful large gold mine in Indonesia, which we on-sold, and then a copper mine in Zambia, which again was on-sold. So Yeah, that's that business, and it's been operating for around 12 years now. So, and some of the guys that were in Oxiana, Tiger's Realm, also in the team here, plus obviously a group of new upcoming mining stars as well.
When you're looking at an acquisition in EMR, what are you looking for there? Like, are you looking to find something that's a 10x return or a double over time? Like, what are your targets when thinking about acquiring sort of
Yep.
operating or brownfield targets?
Yeah, so our objective's pretty straightforward. It's a three times multiple on money
Yeah.
over a 6 to 8 year period. It's a 10-year closed end money. So
Hmm.
we try to get all the investments sort of done within the first 4 years, and then ultimately transition those out over time. So yeah, it's a 3 times multiple on money over an 6 to 8 year period.
And so where do you find the biggest value add is in these over that time period? Is it is it operational? Is it simply metal prices and playing the cycle well? Is it taking a very poorly run asset and turning it into a mediocre asset, or taking a mediocre asset and turning it into a great asset? Like, where do you find the sweet spot for those returns? And I know a lot I think about this a lot myself, investing in other companies. I know a lot of our listeners are thinking about that. Is, where do you
Mm.
guys want to focus?
Yeah, so I just mentioned the types of returns that we're targeting.
Hmm.
Those returns are underwritten without commodity price change,
I see. Okay. So
right?
they're benchmarked against a certain
So
price.
if we get price tailwinds, that's
Mhm,
cream on the top. That's going to get you another multiple or two, right? So
mhm.
we try to underwrite our investment thesis off the back of consensus pricing.
Okay.
Where we get the leverage is really what we do with the asset. So it's improving the operation, but probably the biggest leverage in the whole thing is resource reserve build out.
Hmm.
Because if you think about it, in a transaction, you get paid by a number of things, but a reserve multiple, a resource multiple are key drivers. And let's call a resource multiple might be $100 an ounce. If you can convert a resource ounce into a reserve ounce, then it's $500.
Hmm. So
So
what's it cost to take it from $100 an ounce from rather a resource for a reserve? Is that kind of you're playing that game too?
probably cost you $10, right?
Yeah.
So what we try to do is to build the resource inventory. We try to then build the reserve inventory so that you can demonstrate a clear 10-year reserve life for the incoming party, fix up the operation, expand the operation. So it's the operation's running steady state. It's got a really solid 10, 12, 15-year life in front of it based off reserves, and people pay you for that de-risk certainty. And we try to underwrite that at consensus prices in terms of our investment. If we get tailwinds on price, as I said, that's cream on the top.
Do you think you guys are unique in doing this? Because it's interesting to think about, because so many of particularly the mid-tier miners, exploration is often the last thing on their mind, and it's often the first thing in the budget that gets cut in terms of and you maybe see them cut off the long-term value of these assets, and so many people buy them, and then they expand the resource, they expand the reserve, and you see that value uplift with the next owner. Is this, I mean, I'm not quite sure what my question is here, because it sounds very obvious when you say it, but
Yeah, yeah,
I think it's something a lot of management
yeah,
teams and corporations miss.
yeah. Okay, so there is a very different mentality between what I'm talking about now as an investor mentality
Yeah.
and an asset improver seller of assets, investor, right? So it's an investor mentality versus an operating mentality. An operator, GM operations, will not spend capital today, and his corporation will not give him capital to spend today to prove up reserve ounces for 10 years' time.
Mm-hmm.
Right? Because they say, well, why do we need more than 5 years in front of us or 6 years in front of us? That's plenty. Why are we proving up ounces, spending capital today? So there's an operator mentality versus an investor mentality, because the operator is not thinking about selling his assets, right? He's thinking about operating his assets. So, that's where there's often opportunity. It's the difference between how a corporation thinks about an asset and how an investor thinks about an asset, or an acquirer thinks about an asset. So there's that sort of arbitrage there. And then, often the assets that I'm talking about are non-core assets in companies. So where we've been most successful is buying assets off mid-tier and majors. So if you think about it, if they're doing their job well, they've probably got 6 or 8 assets in a portfolio. They've got 2 really top-notch, world-class things. They've probably got 3 or 4 tier 2s, and then they might have some things down the bottom which are, they're good assets. They're washing their face. They're making a bit of money, but all the good people get taken out of there into the highest value part of the portfolio. All the capital goes to the highest part of the portfolio. So these things just tick away, and they're just very sub-optimized. They don't get people, they don't get capital, they don't get optimized, they don't get expanded. So there's a lot of room in that space for someone like us as an investor. So we can go in very singular focused, put in a really top-notch team, incentivize them to deliver on the investment thesis, put the money to work, and then ultimately work that plan over time. So, it is an area, but I think to your point, Jamie, there's not many groups who are equipped with if you look in the private equity world, most of the private equity firms that are our competitors or peers, whichever way you want to put it, are generally from the financial world. So it's investment banking teams, metals and mining banking teams, and others who then add the technical skills around them. Whereas our group is a bit unique in that it's a group of operators, mine finders, developers, builders, operators who have then added the financial clout to that. So it's a sort of a bit different in terms of its structure to the other groups.
Okay. Well, as the last part of our conversation, I'd like to talk about what you're doing today. So you are now the chairman of Andina, an exploration company focused on Latin America. Why make that shift now? I know you're still executive director at EMR, but why make that shift now from deploying billions of capital primarily into operating mines to going kind of grassroots exploration again?
Yeah, that's a good question, and you see a smile come on my face when you ask the question. So, I'm an exploration geologist by background, and we've just been through a lot of the things that I've been involved in. Discoveries in Laos. Yeah. I didn't mention. We discovered a greenfields discovery in Cambodia gold deposit, which is now Emerald Resources, and that's a three and a half billion market cap company off the back of our discovery in Cambodia. So we made that greenfields discovery there as well. I didn't even mention that, but there's Sepon on the Ho Chi Minh Trail, big copper gold, greenfields discovery Cambodia, South Australia, early stage sort of discovery, a lot of brownfields exploration discovery, next gen energy. So my real sort of motivation, passion is exploration and exploration discovery. I've been in the sort of, I guess, the private equity world for the last 12 years. And, you know, it's a very intensive business when you're running sort of 4 or 5 mining operations that are going 24/7, and they're turnarounds, right? And turnarounds are just like, you know, like every day I drive to work, I'm thinking, what happened last night? What happened what happened today? So it's very intensive. My real passion is the exploration early stage. It's a natural point in time for me to start to make way for some of the younger executives that are in the one of the things in our private equity business. One of the things that the private equity world, particularly in the mining space, hasn't done well is transitions. So we are sort of naturally okay, let's start to bring some of the younger team through, give them more responsibility. So my role within EMR going forward is to support, mentor the younger team and transition them to take over from, as I sort of pull back, they can take over and step up. So that's sort of natural progression, because if you think about it, at my age, the next fund is 10 to 12 year money.
Mm-hmm.
So, you know, it's logical. It's a logical point that I sort of start to transition back. So then I'm like, okay, what am I going to do for the next stanza? Because, you know, I'm a guy who's like, I'm absolutely 100% as a mining investor, entrepreneur. That's my life. That's what I do 24/7. I don't do anything much else. And that's what I'm motivated by. So every single day I'm like here early, I'm, you know, drive all the time. So then I'm like, okay, what I want to do is go back to, I really would like to be involved in, I love copper, have always done. Copper gold is sort of core. And, you know, make another 1 or 2 good discoveries. And support and work with some of the next generation of entrepreneurs to help them, actually support them with both capital, experience, knowledge, and, you know, building teams and everything else that goes into build successful companies. Work with them, put together some really good platforms, and then, you know, off the back of that, make a couple of good discoveries, take them right through, and ultimately get them to a point where we create a lot of value and can exit those for the benefit of all the stakeholders.
You know, you mentioned mentorship, and you've also mentioned both Craig Parry, chairman of Vizsla Silver, amongst other things, and Charles Funk, founder and CEO of Heliostar Metals. You know, both have built over the last, I don't know, call it 5 to 7 years, you know, tremendously successful companies, exploration, and in Charles' case, operations here in Vancouver and in Canada. But both of them have cited to me independently of seen you as an early mentor in their career and an important mentor in their career, someone that kind of gave them a shot early and gave them a lot of advice. How do you think about building teams of technical people around you and then helping them transition from the purely technical role into a business role or an entrepreneurial role?
Yeah, no, it's so, I mean, firstly, it comes down to selecting the right people to back, right, to work with.
Yeah.
So, you know, you know, you look for particular traits. You know, to this day, the number one thing that I sort of look for in people is what is their motivation? What motivates them? Why are they here? Why are they still doing it? Why are they still hungry? And it comes back to what I was saying before. You know, I've been involved in multiple discoveries, and it's an addiction. I can tell you, it's an addiction. When if you've been involved in discoveries, the excitement, the thrill of, you know, finding something that turns into something that's of huge value, and bring all the stakeholders with you. It's both it's really quite exhilarating and addictive. So you'll find that it's no surprise that Charles and Craig have been involved in multiple sort of along the journey, right? Because they're part of our team, so they've got that sort of motivation and hunger. Then they've got to have, they've just got to have, okay, well, what is it that motivates them? So I always go back to original motivation as to what's that. So then if you've got the right motivations, and then you've got the right sort of makeup, that you're prepared to work extremely hard, you've got resilience, that you can get through the ups and downs, and that's where mentors become important. You've got to support people when you got to keep them level-headed when things are going well, and you got to support them when things are down the bottom. But then you've got to give them the development, the training. So I spend a lot of my time. So we've got Dan Simmons as the CEO at C3, and we've got Joe Bander Nelson, the CEO at Andina Copper. They're both sort of early 40s, mid 40s age group. Neither of those guys are out of technical backgrounds, but they have very strong work ethics, extremely good work ethics. They are very motivated to be successful. They want to make a name for themselves. So I can help them with the support, mentoring experience that I just talked about. And then I can help them, I've been in the business, all my working life. So I know a lot of people, networks, both technical, non-technical, capital markets. So I can provide them with sort of that exposure to that network, that support, to put together the capital, to put together the technical teams, and then ultimately build a package that has all the attributes to make it successful. Then go help them filter projects, get quality projects, put it together with the right package, and then you've got a strong formula for success.
Okay. Well, we're just over an hour now, and I don't want to take up too much of your time today, but what are you most excited about over the next 6 months? What should investors listening to this be thinking about with respect to C3, with respect to Andina? What would you like people to know?
Yep. So, well, number one is that I'm really pumped about what we've got in front of us this next coming 12 months in both of those companies. So a lot of the foundational work for those two companies has been done over the past 2-3 years, and they're really at the point where they're really ready to fire their best shots and turn them from junior explorers into companies that have got major discovery successes. So Andina Copper has got 3 projects. It's got Pirquinas in Argentina, immediately adjacent to the Altar copper project of Aldebaran. There's about 2.5 billion tonnes of about 0.43 copper next door. We've got the other part of the district. We've discovered one porphyry there. We've drilled that up. We've got geophysics, geochemistry, and drilling happening there right now. So that's, I think it was an announcement out actually last night, updating the market on all that. So very active program going there. As said, one discovery, it was actually the second discovery, which is Pirquinas East, and we're looking to build out 300-400 million tonnes of really nice copper gold grade on that project. Strong team, great location, in a jurisdiction that's opening up, and there's a lot of capital flowing into it and a lot of interest in big copper projects in that part of the world. So that's Pirquinas, and then we've got a project through the takeover of Rugby Resources, which we executed on early this year. called Cabrasco down in Colombia. Very exciting, major district in the Andean Copper Belt, the extension of the Andean Copper Belt. If you think, 70% of the world's production, Chile, bit in Argentina, coming up into Ecuador, and we've just seen SolGold now being taken over by Jiangxi Copper for multi in the billions of transactions. And then that's sort of that you're into the jungle. I think you got Solaris there as well in Ecuador, and then that belt continues up into Colombia. Colombia is very underexplored in that part of the world. Many of the major companies are looking there. We've got likely to have some transitions in terms of government in Colombia next year. And I think, if that happens, then you'll see a flood of companies coming in. But you've got companies such as Collective working there. They're in I think they're $1.5 billion market cap off the back of a great discovery in Colombia. So it's opening up. A lot of the majors are interested in it. And the reason they're there is because what we have at Cabrasco is a very large footprint. It's 12 kilometres long of strong geochemistry. Rio Tinto is immediately next door to us. We've had approaches from multiple majors. We're into our fourth hole into what looks to be a major discovery. We've got very long intersections of ore grade, what I would classify as ore grade intersections over 800 meters. So that's very exciting. It's very exciting. We've got we've got a drill turn in there now, and there'll be news flowing out of that. Joe's did an great job, and that whole district will come together. I mean, it looks like it's a multi-billion-ton district with a lot of interest from the big majors. And here, as a junior company in Andina, we've got a big piece of it. And we've got the opportunity to build a deposit of several hundred, if not billions, several hundred million tons, if not billion, more than 1 billion tons of copper ore. So very excited by that. And then there's a third project, which is Mantau down in Chile, which in its own right has some extremely interesting things. It's immediately adjacent to another good discovery by Marimaca. Yeah. So if you put that package together, it sits in a 100 million market cap company or thereabouts today. But, the opportunity is there to create, many multiples of its market cap today off the back of those discoveries that I talked about, and potentially, the opportunity to create more value from the Mantau in Chile as well. So a lot there. And then at C3, again, I should just say Andina's got a great team led by Joe. Joe's got a lot of experience in South America, and we're building out a very strong team, which is off the back of sort of pulling together from, out of the network, a great execution team on the ground, putting together the share register, the capital markets piece and everything to support all of that. C3 Metals, the name has said, led by a very strong team. Jamaica is farmed out to Freeport. Freeport's funding to the tune of $75 million into that project. Big programs happening, constant news flow. We are the operator, so the news flow is flowing through C3. But really excitingly, C3's we put together a big package up in one of the most prospective belts in the world, where there's major mines up in the Andahuaylas belt in Peru. And you've got Glencore operating Andia, you've got Hudbay operating Constancia, you've got MMG operating Las Bambas. These are 400,000 tonnes a year copper operations, 100 and 200,000 tonne a year copper operations. And they're all in close vicinity. We're in the middle of all of that, and we've got a very big, attractive copper target, which is just first drilling into a completely new discovery. First hole's just gone down. Very happy with the first hole. It's a big system. It's over many kilometres, and we've got to systematically drill it. So again, very strong news flow out of the Jamaican JV with Freeport for copper gold, and out of this new greenfields discovery up in the Andahuaylas belt, in amongst giant deposits. So exciting times at C3. So we've got a lot of news flowing out of both of those companies and a lot of opportunity to create big value over the next 12, 24, 36 months.
All right. Well, Tony, thank you so much for taking the time today. I have so many other questions I could ask you. I'd love to have you on again in the not so distant future. Anything else I didn't ask that you think people should know about? Anything you'd like to say before signing off?
No, I think we've covered most of the ground today, Jamie. I think, the critical thing is to, it's the formula. The formula is clear. Any company that I'm involved with and you see me involved with will be fundamentally underpinned by high quality assets, a high quality team, excellence in execution, and stacked. The way I think about it is stacking probabilities in your favor to get from an industry average of 1 to 1,000. That's 1 in 1,000 prospects makes a mine. To getting down to a manageable, concentrated portfolio of high probability of success. So I think if you look at the businesses that I'm involved in, you'll see that recipe. And I think that gives shareholders confidence if they've got some time and patience to get some outsized returns.
All right. That's a good way to sign off. Appreciate that, Tony. Thank you so much for your time today.
Thanks, Jamie. Great talk.
All right. Bye for now.